afternoon from Los Angeles, and welcome to Stock Market Today, sponsored by Interactive Brokers. Now, on today's show, we're going to be taking a look at the charts of Essent Group, Burlington, as well as Enphase. But first, a critical day to analyze those major indexes. It's Alyssa Corum here with Ken Shreve. And Ken, a pretty wild day here. We did have the NASDAQ ending up closing down about 0.8%, pretty heavy selling rapidly coming into the market in the middle of the session on news that China officials canceling a trip to visit U.S. farms. So obviously the market taking that as somewhat of a negative sign in terms of the broader trade talks. What's your take?
Well, not sure if it's an overreaction or not, but it was around just after 1 p.m. Eastern. The NASDAQ was only down about 0.3%, and then just like that, it was down more than 1%. You mentioned why. I mean, there was a two-day meeting in Washington between China officials and the U.S., and that's going to come ahead of major talks in October between President Trump and China's president. So in the end, it looks like it's going to be a distribution day, not only for the NASDAQ, but also for the S&P 500. We did have options expire today, which resulted in pretty heavy volume. So looked like the NASDAQ was going to rally off lows. It now seems to be a close in the bottom half of its range. So definitely sellers in the market today, but hey, we still remain in a confirmed uptrend here.
That's right, and we're still above that key 50-day line, so that is definitely an area that we are watching very closely.
Yeah, I mean, 12 straight closes for the NASDAQ above the 50-day moving average, and it's only about 2% off its high. So I think the bulls still have reasons to be optimistic here, and we're seeing generally good action in growth stocks. Kind of a mixed bag, but
right.
Too early to give up on this uptrend.
Yeah, there's still some quite a few bright spots, so we will take a look at those individual names now, starting with Essent Group, which gained about 4% today in heavy volume here, so breaking out of a double bottom base here, and it has been able to turn in strong growth on the top and bottom lines.
Yeah, I mean, it's an IBD sector leader, so we know it passes muster fundamentally, and it's also been showing relative strength. Good close for Essent today. You can see that, close near session highs in heavy volume. Good for a breakout over a 50 buy point. So this is just a good example of what a powerful breakout should look like. We had some breakouts yesterday where stocks were strong and then they faded with the market and kind of closed below buy point. So it's been kind of a mixed bag. Still a tricky environment for growth investors, but a good day for Essent for sure.
Yeah, that's right. And even though that relative strength line isn't at all-time highs, it is hitting a short-term high, so that is good to see.
Yep, absolutely good RS line and just a good breakout overall.
Well, let's take a look at a weekly chart for Burlington stores. So it's been able to find support near its 10-week moving average, a nice rebound here for the stock, able to close up around 2% for the week.
Yeah, nice price target hike earlier today from JP Morgan. Price target raised to $242, and when you see a stock trading around $200 a share, it leads you to believe there could be a little more upside here. But this is a stock that really made a powerful move a few weeks ago on strong earnings, and then for 2 straight weeks it declined in very orderly volume. If you look at the volume bars down there, the past 2 weeks, very, very light volume, and a good showing for Burlington this week with a solid weekly gain in higher volume.
Yes.
So this is a stock that is acting well, definitely one of the top retailers out there, so still like the look of Burlington stores very much.
Right, and if you were either looking to add with a rebound off of the 10-week or maybe even initiate a position if you're a little bit more aggressive, is the stock still within range here, or would it be considered a little extended at this point?
I would not consider it extended at all. I think it's for those that bought on the powerful gap up on earnings and looking for an opportunity to add to their position. Certainly, a good weekly performance for the stock, this week is, perfectly good opportunity to add to the position.
All right, great. And let's cap things off with a look at Enphase in the semiconductor space. Now, Enphase is building a base. It's been able to find some nice support around the 50-day line, and it's trading just about 5% below a potential buy point.
Yeah, we've been talking about semiconductor stocks being a nice pocket of leadership in the stock market, and we've talked about Enphase before, but we're still talking about it because it's a relevant stock. And anytime a stock builds a base right along the 50-day moving average, and the daily chart here provides a very good visual. You can see supporting action at the 50-day moving average. The stock was up today on a pretty sharp down day for the Nasdaq. So this is a good-looking base taking shape with a 66 buy point. I don't know if that's unlucky or not, but
well, I guess on the slot machine, if you're looking for all the same numbers,
yeah,
I don't know.
I'm trying to figure out the last time I saw a buy point of 66, but it's a good base here,
right.
And this is definitely a breakout candidate. You want to look at charts like this when the market's in a confirmed uptrend, and that's still where we're at.
Right, and just a quick reminder, speaking of the buy point, the reason why we add 10 cents to every buy point, from whether it's that prior resistance level being a prior high or a handle, we add that 10 cents to really make sure that it's clearing resistance.
Yeah, because right now 66.56, it wouldn't be surprising to see Enphase, come up close to that prior high and then maybe get turned away due to selling pressure. There's sometimes one last shakeout before a stock breaks out, so we want to see it take out that left side high with conviction, which is why we add 10 cents to 66.56.
Yes, yep. That is right. All right, everyone. Well, before we go, just want to remind you that we do have a new episode of the Investing with IBD podcast out now. This week, we had Mark Minervini, the stock market wizard, back on the show talking all about his new book coming up about mindset tricks and something interesting. He said that he wasn't able to turn a profit for about 7 years when he started investing, but it all really came down to his mindset. So he shares some of his tips with us. And I mean, it really has paid off for him because, national investing champion, just a wizard, I guess you could say.
Well,
that's what he's called.
Yeah, he's an outstanding growth investor with a great reputation. And another thing in this podcast, he talked about the fact that, successful investors aren't right all the time. And even during roaring bull markets, if his batting average is 60, 65%, he's doing very, very, very well. So he capitalizes on his big winners. And even though he might be wrong, half the time or five times out of 10, he keeps losses very small. And with the big winners, he really capitalizes on those.
Yes, so some really great lessons there. Make sure to listen by going to investors.com/podcast. And a quick little preview of our investing strategy show at the NASDAQ coming up on Monday. We will have our very own Justin Nielsen joining me on the show to talk about current market conditions, as well as some top stocks on his radar and IBD's ETF strategies. It's going to be a good one. We're also talking to an executive with Adobe, which is a stock that we've followed for quite a while.
One of the early pioneers in cloud computing, for sure.
So that's going to be really fun. Make sure you head to investors.com/investing strategies on Monday evening for the show. All right, everyone, thanks so much for joining Ken and I today, and we'll see you right back here next week.